Thank you so much for joining us. I'm Jen, and welcome to the first Blockchain Banter Trading Crypto series. We've got a wonderful panel up here today, and for sure some things, interesting takes and things happening to discuss. I'm really looking forward to doing that with all of you here. We'll go ahead and start with introductions. Keith, welcome. Thanks so much for being here with us. Maybe you wouldn't mind starting us off. Tell us a little bit about yourself and how you got started trading. Keith, you're muted, by the way.
Can you hear me now?
We can hear you now.
Okay, sorry about that. And thanks again for including me on this panel. This is awesome. Glad to be a part of this group. So my trading history kind of started, I don't know, about 2016-ish, where I was actually had sat down with my dad, and we decided we were gonna so started getting some tutoring on TA, and shortly after that time, my business partner Brad Nickel, who was actually on yesterday, had turned me on to Bitcoin. And so this ended up being about October 2017, when we were trading in the $6,000 range on the run up to 20, was my first introduction to trading crypto. And like most people who came in around that time, thought, oh my God, this thing is a runaway train and it's going to be amazing. And then learned some hard lessons after we peaked at the 20K range, and really set myself up to really start studying and learning and understanding risk management, and made my run through the shit coins that taught me some hard and expensive lessons. But over the years, have really started to develop a system that works for me. May not work for everybody, but works for me. And of course, along the way, we co-founded Material Indicators, which gave me the tools and the data that really gave me the confidence to trade the way that I do now.
Awesome. Thank you so much. Definitely want to hear more about Material Indicators, and we will. I follow you guys and have been following these fire charts, and I think what's really neat about it, it works for you. It might not work for everyone. I think that's kind of the beauty of having a sort of diverse panel, right? We can all kind of talk about our own strategies and things and find what works for us individually. It's great to have you here. Thank you so much again.
Thanks, and I just have to agree with you on the diversity of the panel. When you're in your communities and your groups and the certain circles that you tend to gravitate towards, I find that a lot of people surround themselves with people who share the same narrative, and the education comes when you start listening to different people's perspectives. So this is great that we have a diverse group like this.
Yeah, absolutely. Thank you so much. Speaking of narratives, Crypto Choreo, it is great to have you back. Thank you so much for joining us. Tell us about yourself, if you would.
Yeah, sure. Again, thanks for having me. It's a pleasure to be here for the second time. So, yeah, I'm a data scientist, and about my journey in trading and crypto, it actually started in the DeFi summer 2020 through my brother, who was really into Bitcoin a lot earlier. But I was really into my studies and the data science, etc. So I wasn't really a finance. I never actually was too much into finance, but yeah, he was talking a lot to me about Bitcoin, and then I was convinced, and then I told him, okay, how do I start with this Bitcoin thing? What should I do? And he told me, yeah, it's just easy. Just install the Binance application and you can get started. And that's how I did my first trades. And then very soon, as I think it happens for most of the people, I got attracted by leverage trading and perpetuals, and I lost some money there. And there was a lot of lessons there as well. Environment was actually really interesting. I had this very simple idea because every day I was looking into the charts and I was seeing everything was pumping like 20%, 30% every single day. And I thought, okay, actually I can maybe capture just a small part of this move by taking a leverage, like a 10x leverage. I can probably capture 1% of that. And so my strategy as for my first trades was, okay, I will just go all in with everything that I have with the 10x leverage. And as soon as I have 1%, which would translate in like 10% with the leverage, I cash out. And so that turned out to be not a very good strategy, and involving a lot of stress and also a lot of emotions and liquidations. And so then afterwards, being a data scientist, I started to actually work a lot with data and backtest a lot of strategies and trying to better understand what moves the markets, etc. And it's something that I've been continuing doing in the last 2 years, and here I am.
Thank you so much for sharing. I'm glad you mentioned that I mean, not glad that it was stressful for you, but I'm glad that you mentioned it and that, there was the emotion involved, because hopefully throughout like these discussions, we can help kind of allow users, or, I say users, but traders, to experience a less stressful sort of experience when they're trading, and, through what we share and kind of our discussions and things, and take the emotion out of it also, because I know that that is huge. Mark, maybe you can, I mean, that kind of goes hand in hand with carbon, right? So maybe you want to take it from here. I'll pass it off to you. Maybe you can introduce yourself and tell us a little bit about carbon.
Yeah, certainly. So my name is Mark Richardson. I'm the current project lead at Bancor. I come traditionally from a organic chemistry background. So finance is not something that I studied at university. This is something that I've sort of picked up over the years of after already being qualified as an organic chemist. But I think with respect to trading, my perspective is kind of nuanced. A lot of the trading that I did was sort of mostly with an objective to learn how some of these financial products actually work. I'm fortunate enough, I think, to have traded quite well when I was trading frequently. And I was using leveraged exchanges like Bybit, for example, to trade Bitcoin with leverage. I know that they've added I think ETH relatively recently, or at least in the time that I've stopped using that exchange. I also use just spot trading on the subsidiary of Binance that we have in Australia, which is called SwiftX. And I've been developing trading protocols and exchanges on Ethereum for the last 3 years. Carbon is the most recent iteration of what I would consider to be the decentralized exchange infrastructure that not just offered by us, but I think is the most recent iteration on offer anywhere. And Carbon is, it is definitely catering more to this sort of trading crowd. I think where AMMs have historically wanted to bring people in who don't necessarily consider themselves trading, or don't consider the act of liquidity provision to be trading, which I think both of these things are contestable. I think just offering liquidity to an AMM, you are most certainly a trader. It may not be marketed that way, but certainly the actions that you're taking can be defined at the financial level as akin to an options trade or an options strangle for those who are more familiar with the options vernacular. Carbon is unique in the sense that it allows you to execute a precise trading strategy, I would say, in a much more sober and disciplined way than spot trading does. So I don't have anything like necessarily against spot trading. I think that it has some pretty significant drawbacks, but nothing that would preclude it from being one of the activities that someone that considers themselves a professional or disciplined trader should necessarily steer away from. But the problems that you do have with spot trading are things like price execution is generally quite uncertain, not just in DeFi, but on any order book, because essentially the themes of front running and sandwich attacks in DeFi do have equivalents in centralized markets as well, and so you're never really quite sure of the price that you're going to get. Whereas if you are trading via actually creating a market by posting your bids or your asks in an order book, the price execution is generally a lot better, but you need to obviously be patient while the system finds someone who is willing to trade against you, which is fine. So Carbon really sort of takes that mentality to sort of the next level, where it's not just necessarily the price execution that you want on a specific asset at this moment in time, but that you may want to nominate a price range that you're happy to sell at. So, for example, if you're looking to enter into the Ethereum market today, it may be with a view that ETH is actually going to retrace. Certainly, the Bitcoin community has been following the Bitcoin dominance charts now for a few months, and I think that the consensus view within that group of people is that ETH should continue declining against Bitcoin at least until the end of the year. And so, if that was one of the perspectives that you share, then one of the things that you might do on Carbon is say, well, when ETH drops to this certain level versus Bitcoin, then that's the range that I would like to start buying ETH at, because historically, especially in a pre-halving year, ETH can actually start to rally against Bitcoin in a rather profound way, but generally between the months of like February and early June. So you might say, okay, after I've bought that ETH, I would like to sell it back for wrapped Bitcoin, at a higher price target, maybe a 20% or a 25% margin or something like that. And so Carbon is an instrument that allows you to express precisely those market views. And there isn't really another protocol on Ethereum or anywhere that allows you to essentially define exactly how your tokens are traded at specific price points, and then how the proceeds of the sales of tokens should be used to rebuy tokens again at a different price point. And so, yeah, it lends itself very, very well to a sort of disciplined view and trading mentality. And, the way that I've presented it here makes it sound like the view should be long term, but that's not true either. If your market perspective is only, a week long or a few days or even a few hours, Carbon can just as equally accommodate those kinds of timeframes as well. So it really is a nice general purpose trading tool, and I think that anyone who has a sort of sober and planned approach to trading particular pairs will find a lot of utility in it.
It's really just taking the emotion out of it, right? Like even if you're just saying like, I think this is going to pump tomorrow, and it executes, you're like, great, you don't have to hit the big red sell button. Carbon does it for you. So it's kind of a hedge like against your own emotions, and the time span can be whatever you want it to be, right?
That's definitely what we've seen or like heard from a lot of the community. Actually, just recently, and I can find the post and pin it to the top, somebody who had created a strategy just recently posted that it was kind of nice to not have to emotions, which is what Crypto Choreo was saying. Tyler, we jumped right into that, but why don't you introduce yourself?
Yeah, sure. My background's similar to Keith. My dad was a big trader, and I remember when I was a kid watching him navigate the .com bubble, and kind of sparked my interest when I was super young with trading. And rest is sort of history there. I was traded quite a bit in the stock market. Friend turned me on to Bitcoin around 2013. I didn't really get it, didn't understand it, and then started getting it in 2016. And I sort of skipped the Bitcoin buy-in and went straight into ETH because of the tech and the vision that I saw happening there. And yeah, I've been a pretty active trader for the past 7 years, primarily in DeFi in 2019, 2020. And yeah, that's mostly it.
Keith, you unmuted. Did you want to add something before we?
I was just going to ask Mark. Does this perform similarly to like a grid bot?
Yeah, absolutely. That's a totally reasonable way to think about it. A grid bot in general will have just one execution price. So like I'm thinking about grid trading as it existed in Forex since like the 1980s. We've seen there have been some developments in the grid bot side of things that allow for like a variety of execution prices, which is, I think, good. And Carbon has that sort of built in. So rather than just choosing like a single price point to execute at to either side, you can actually choose a range of prices that are enumerated sort of infinitely, like with infinite precision, and there are effectively an infinite number of specific price points that it executes between the two ranges that you set. But details aside, yes, you can think of it exactly like a grid bot. So if you've been using grid bots previously, you can think of Carbon as being a maker grid bot, which is very attractive compared to some of the other options that we have with things calling themselves grid bots but tend to take rather than make.
Absolutely. That sounds very interesting, and this may be an unpopular question among this group, but I'm a spot trader. I live in the U.S. I'm a spot trader. I've got all of the KYC restrictions of my government protecting me from myself. So I can't trade the way that a lot of people trade. DeFi, of course, is obviously attractive, especially in light of what we've seen here with counterparty risk with exchanges, and I've experienced that since I first started back in the Cryptopia days, all the way through what we're seeing more recently with the FTXs and what's going on with Binance and stuff. I've been moving from exchange to exchange to find a place that I feel comfortable. I will tell you that despite what my partner's expertise and love for DeFi, I'm still, like many spot traders, a skeptic. Many centralized traders, a skeptic, with concerns that are largely, part of it is, I still have not seen 100% D in any DeFi yet, and I realize that you have to build to get towards that. But the other part of it is, there's a barrier to entry for people who aren't really DeFi savvy, right? It tends to be a cumbersome and clunky way to get in and to get yourself established and set up. And since you're dealing with money to get yourself, to get yourself set and ready to trade, I think that is a barrier for a lot of people. What are you guys doing, or what do you think the industry needs to do as a whole to make DeFi more accessible? It's not that people, and I don't think it's that people can't learn. It's that people are reluctant to do something that feels uncomfortable.
Yeah, it's a really terrific question. There are some things that are sort of within our realm of influence, and then there are things that are outside of our realm of influence. So let's say that, so for example, with the UI UX that we developed for Carbon, it really is deliberately built to feel a lot like how interacting with any order book would feel like. And so, one of the things that you may notice when you come to Carbon is that as you are perusing the different trading pairs, the chart that you're presented with, it looks like a literal order book, right? You can see the depth chart and where all of the orders are placed. And when you're trading against it and interacting with it, it's slightly more feature rich, but still very familiar. And this is not just happenstance. I think that, if I'm recalling correctly, some of the design conversations that we had back in sort of October, November of last year was that, DeFi has kind of built this, I don't know how to call it, but this particular aesthetic that DeFi protocols sort of should have. And it was generally, I think, meant to be as I don't want to say simple because they weren't necessarily simple, but maybe, inviting and trying to obfuscate sort of some of the decision making as much as possible. Whereas with the design principles that we instantiated was really about, what do the people that are coming from CeFi expect to see when they're interacting with a decentralized finance application. And so that's really the guiding principle that we had, and I think that it's serving us quite well. We've received a lot of positive feedback, about how intuitive the user interface is, and I think that that's important because unlike some of the other DeFi protocols, Carbon actually does require you to make a decision, right? The protocol doesn't prescribe for you a particular trading strategy. You have to tell it exactly what you want to do. And so, borrowing from, close to half a century of CeFi applications, even going back to the original trading terminals at the exchange floor themselves. I think that UI UX experience has really had a long road of development and borrowing from some of what has been done in that context. I think it kind of does bleed over into DeFi quite well. So that's one aspect to it. We want to make sure that when people come to Carbon for the first time from whatever exchange that they've been using in the centralized capacity, that the learning curve is basically nothing, that they have access to all of the tools that they're used to seeing and that they know precisely how to set up their position. With respect to some of the other stuff that you said, so for example, learning to, I think everyone should, who's interacting with a blockchain, have a hardware wallet, for example. However, regardless of how you feel about Ledger and their key recovery product and everything else, it's still infinitely better to have a Ledger product holding your keys than it is to try and have a hot wallet or something like that running straight out of MetaMask. And that's a process, like ordering the product, learning how to use it, learning how to secure your seed phrase and setting that kind of stuff up. Learning to integrate it into your browser via MetaMask or another wallet. I mean, I get it. It's a nightmare. And, the user experience in DeFi generally, because of these, because of that high touch component and the high level of competence that's required of the user before they can actually use it. I mean, it's a huge problem, but we have seen some compelling answers to at least some of these problems. For example, some of the account abstraction stuff that's happening, especially with respect to the multi-sig stuff that would, for example, prohibit someone who's gained access maliciously to one of your keys from taking an action on your behalf without gaining access to all of them. This kind of stuff. There's both security and simplification requirements that kind of need to be met. And this is something that I think I heard anecdotally that Vitalik Buterin actually spoke about in a recent interview, was that in the rush to get Ethereum to market, they kind of knew that they were making concessions on a bunch of these fronts, and that it's a nightmare trying to steer the ship back to back to something that would be considered a reasonable user experience. And in a way, we're either going to have to wait for Ethereum to bring those processes to market by themselves, But on the flip side, there are alternative blockchains that are, that have actually waited and made sure that some of those processes are actually built in at the hardware level before going to market. Blockchains like Radix, for example, have tried to really make the user experience front and center and let the technology be defined around that experience. So it could be that, after some of these other layer one blockchains go live, that we will see a tremendous improvement and one that really brings down that barrier to entry. But again, it's not something like we don't design blockchains, we design decentralized applications. So we can make the application as user-friendly as possible, but the interacting with the blockchain itself is, something that's well out of our sphere of influence, but something that I pay attention to with every opportunity that I can.
Well, gosh, Mark, it'd be nice if before the next call you could maybe do a little research so you could speak to these things a little bit more, confidently. that was amazing. And I just, seriously though, I just want to say that the fact that you're working on that you guys have dedicated yourselves to making the UI and the UX feel familiar and comfortable. I think that's I think that is a huge barrier that needed to be broken, and I applaud you for doing that.
Thank you so much. We also, I think Jen and Tyler are actually continuously conducting user interviews where we do sort of a handholdy process through the UI and sort of try to extract from the interviewee some of the where the major pain points are, and we're constantly redesigning and improving the app. So I hope that shows for anyone that wants to participate in that process. Please feel free to reach out to Jen, myself, or Tyler after the call. But yeah, we are absolutely dedicated to making sure that the UI UX is super intuitive and helpful.
If I may add to this really quickly, and then Tyler, if you want to, I actually just spoke with somebody this morning who had just created their first strategy on Carbon, who came from a centralized exchange, and their reasoning for it was they like seeing all the information that's available on chain. And so with that, we had spoken about the Dune dashboard and having that visibility into other strategies that users had created, kind of seeing what their thoughts were, and kind of like using that as sort of a guide almost. So it was really nice. I mean, it still is so nice getting all of that feedback and knowing what users want, what they find helpful, and then kind of creating things around that. But I brought up Dune dashboards, and I want to get Crypto Choreo in here a little bit. I had brought up the Dune dashboard that you created the last time we were on our call. It was solely focused on narratives trading, which is pretty much what you do. Maybe you can speak to that a little bit. We were talking about the difficulty of being on chain. I'd like to speak to a little bit of the benefits of it as well. You had posted something recently, and I'm going to pin it up to the top, really kind of looking at the last year or so, or the last 10 tokens, I want to say, with like the strong narratives and price action and kind of what that might have been. For our listeners who aren't familiar with narrative trading or with the sort of research that you're doing, maybe you can give us a little bit on that.
Yeah, sure. So I think there are a lot of benefits to be on chain. One is transparency about the protocols, what they are doing, how much they're earning, and their revenues. There are now actually analytical tools where you can, for example, thinking about token terminal, you can go and search any protocol, and it will tell you how much they're making, their revenue, their fees, and everything. And this is all the benefits of being on chain. And this is one aspect of it. The other benefit would be that actually you can publicly and without any permission see anything that any wallet is doing. A lot of wallets are tagged, for example, the VC wallets, the protocol wallets, and so you can actually follow everything that you want. You can see their last and their latest moves, and so this is also another benefit of on being on chain. So this is very nice. Coming back to narratives, yeah, so this is what I specialize in, and the reason is that in crypto there is a lot of rotations, and there is a kind of a very short span, usually on different themes, and then actually rotations happen, and rotations means that actually money is flowing from one sector to a new sector, and when that happens, you have new projects building on that narrative, and then usually as a trader, you're looking to outperform the market because otherwise you just rather eat, hold, and enjoy your life. And to do that in the best way, you actually have to see what is outperforming, what are kind of the projects or specific sectors in DeFi, because there are a lot of them, that are actually something special is happening, and that translates into kind of a token appreciation or kind of actually something that you can benefit either short term or long term. And so now about narratives, there are now I have this Dune dashboard where currently I have like around almost 30 different narratives. And so these are some of these are specific sectors in crypto. For example, GameFi, for example, different layer 1 project, layer 2 projects, LSDs, NFTs, different perpetual dexes like GMX, DYDX, or dexes like Carbon, for example, or Uniswap or others. Different, for example, there are app chains, there is the AI narrative, there is account abstraction, there are wallets, etc., etc. The most recent ones that I can think of is the Telegram bots. You might have heard of Unibots, which is this also relates to the UI UX that Kate was talking about. The lack of good experience in terms of UI UX made that these Telegram bots became very popular all of a sudden, because you don't have to actually deal with the complexity of different protocols. You can just place your orders from a Telegram bot, which is very convenient, and this is why we have seen their growth in the last month. So about the narratives, like in the last maybe 2 months, we can't say that the market was really bullish. So as a trader, if this is a big part of your work or your job, you want to know what you can do, right? What can you trade so that you can benefit actually from the market, while knowing that the general market condition is not risk on. And so if you look at the last month, actually the Telegram bots have been performing very, very well. Before that, we had, for example, kind of the meme season, which was really strong. At the beginning of the year, I actually published a thread just yesterday going over the last year. For every single month, I listed actually what was the narratives that was outperforming the market. And actually, I did that by analyzing the data of all the tokens and just seeing what was the performance of the best tokens without even considering the narratives. And it was really surprising to see that there was really a confirmation about the narratives and the best performing tokens. So for example, I give you a few examples from the thread that I wrote. You can find it on my Twitter.
1 second. I believe the thread that you're referring to is the one that I just pinned to the top. It says
no, it is not that one. Is one that I shared yesterday. So this one is the Dune dashboard that I have shared with all the narratives that are listed, and you can see their performance, etc. But the one that I'm talking about is one that I wrote yesterday. A single year, 10 narratives, countless opportunities. That's how it starts.
Okay, yes. That's to the top just before I pinned your Dune. So if any,
yeah,
you'll
exactly.
see that one there, so you can follow along with what Crypto Choreo is saying.
Yeah, so I will just share a few examples from this thread because I think it's really insightful. If you look at last year, August 2022, we were in the middle of the bear market, but then there was the merge that was happening. So Lido was actually outperformed the entire market and did like 6x in just 1 month. And there was no other token that came even close to that because we were in bear market. And then after that, when the FTX collapse happened in November last year, everybody was very fearful about centralized exchanges. There were a lot of rumors about insolvency of a lot of major centralized exchanges. So the result of that was a kind of a very short-lived narrative on wallets. So all the DeFi tokens and projects that are doing wallets, I'm thinking Trust Wallet, SafeWell, Coin98, they had a huge actually appreciation in price because everybody was actually moving their funds to a safe place where they have under control of the custody. So that translated into price appreciation. After that, in December, OpenAI released ChatGPT. All of a sudden, everybody was extremely excited about the possibilities of AI, of what it can do, of what it can bring. And so not only in the crypto market, but in the general market, there was a huge, all the investors were looking for kind of AI-related projects. And we see on the stock markets, NVIDIA started also in the middle of the bear market, outperforming everything else. In the crypto market, we also have some kind of AI, at least people associate them to AI projects. Projects like Fetch, for example, like Ocean, these are like AI tokens, if you want. And the entire AI narrative in crypto in December started to boom. And for example, Fetch did a 10x in just 2 months, which was incredible. And again, this is outperforming anything else by very, very far. And so you have a lot of that examples in 2023. The LST summer came, and then you had projects like Lido, Rocket Pool, Frax that outperformed. And then in March, liquidity was flowing to Arbitrum, so we had a Arbitrum kind of a narrative season where all the main projects like Radiant, like Grail, were performing very well. And so this is actually the data is confirming that the best performing assets in crypto through the last 2-3 years have really been those who have been associated to a strong narrative. But these narratives keep changing. I mentioned a few examples. And so to keep track of all of them and to know where the money is flowing, it's useful to have some kind of analytical tools. And so the Dune dashboard that now you have pinned, it's what allows me personally to see actually what's happening, what's trending, where the volume is going, etc.
Tyler, add to it. Go ahead.
Yeah, a few things off what Corio said, and I have a question for him as well. But firstly, I think what he said about looking at on-chain data, the alpha, if you're a trader in DeFi or on-chain trader, like the alpha is on-chain, right? And I think one of the best examples, he mentioned GMX, which for me, I'm a big narrative trader as well. I try to keep things pretty low IQ, and it's worked out well for me. And one instance of that was GMX. Arthur Hayes, who built BitMEX, which was like one of the biggest exchanges in the industry for years, took a sizable position in GMX, and he did it for months and months and months. So seeing that on chain and recognizing that this absolute legend of a builder, this is his wheelhouse, and he sees the most amount of value in GMX. Like that was probably one of the easiest trades that you would have gotten, and it was deep in a bear market over the last year. So definitely recommend checking out Corio's his resources there, because there's a lot to be said about narrative trading, especially on chain. My question for him is, it seems like narratives come and go. They come and go, and they come and go. Whether it's oracles, I remember in 2020, there was this huge oracle boom, and then it went away. He mentioned AI. The list goes on and on, right? Meme coins, literally dog-specific meme coins. Are we going to see a narrative that sticks? Are we going to see like an actual paradigm shift in certain use cases to the point where the token's actually sustainable and keeping like this value capture over a long period of time? I think that's maybe on-chain perp trading. I think GMX, we're seeing that with GMX, DYDX, a whole bunch of other projects are seeing sustained success. And I'm just wondering, is that the narrative you think that sticks? Am I missing other narratives that have been sustainable, or are we always just going to be looking at this like 1 to 2 to 3 to 6 month time span and then like moving on?
Great question. So I think I do agree with you that we have some less longing narratives. You mentioned perps. I think the LST is another one. There are a bunch of them. We can talk about them. But I think there are two things. First of all is bear market. We are in the middle of the bear market. So actually, as soon as something pumps, the traders, investors are fearful that the market conditions are not that favorable. So they are actually very fast at taking profits. And that translates in shorter kind of life for these narratives. This is one aspect of it. Then the other aspect is for something to be sustainable, you cannot have like explosive moves like we have seen for some of these narratives. For example, when the ChatGPT thing came, this is something that wasn't priced in any token. So when Fish does a 10x, it's because there is a new information that is not priced in, and then all of a sudden investors rush into that asset, and then it gets priced in and it jumps in price. However, the more long-lasting narratives like perpetual dexes, like GameFi, for example, or like LSTs, these are things that we know will have a clear future will have a clear future. However, it slowly gets priced in, and it's very sustainable. But this means also that these won't be the narratives that will outperform for forever, right? Because it gets priced in, and then it's sustainable, and slowly it goes up, versus some of these other narratives like memes, who you get like 2 weeks of very explosive moves with 20x, 30x some of these tokens, and then it goes to zero, and then it dies. So I think there is no narrative that can continuously outperform the market for a very long period of time, and it's not even healthy. As a trader or investor, you want to see healthy moves in narratives that have fundamentals, that have strong thesis.
So, hey, Janice, Keith, if I could chime in on this, I think.
Go ahead, Keith.
Tyler raised a great question, and Corio elaborated on it, and that is the sustainability of the narrative. I'm a guy who tries to avoid as much of the noise and tune out the noise on crypto Twitter as I possibly can. I look at data. I look at order book and order flow data, and make a lot of my decisions based on what I see in the charts. But when I first started in trading in crypto, I wanted so desperately to be able to assign, fundamentals like we typically do when we're picking stocks. And it didn't take long for me to realize that even though a project looked good, and you looked at, obviously there wasn't P&E and things like that, but there were things that we could gravitate towards that made us think that, hey, this project might be worth investing in. And then, we kind of know how that shook out since 2017. And I think what Corio is putting together here, or has put together here, sounds amazing, because it does give traders the opportunity to capitalize on the volatility, and much of that is driven by the crypto Twitter narrative, whether it ends up being sustainable or not. In most cases, it hasn't. But I think when we get to sustainability, that's when we're talking about fundamentals, right? And so if, Corio, if what your platform is doing is identifying the projects and coins that are associated with the narrative, to give traders, some data to make those decisions at, but at what point does it, or is it even possible to track or measure what would be a set of fundamentals akin to what TradFi traders are accustomed to looking at?
So I think some of the things that we typically look for fundamentals some of them are easier to measure, and some of them are not that easy to measure. I would argue that typically, especially with the recent tools like Token Terminal, it is getting easier to do fundamental research and fundamental investing in crypto. I'm thinking about looking, for example, into revenues, the fees. These are something that is data available on chain, and you can actually verify. And for example, there is a very great Dune dashboard on Maker, which is, I recommend everybody to watch that, because it allows you to see exactly day by day or even block by block how much money they are making, what's the revenue, what's the fee, and different wallets that they have, how the expenses are managed, etc. So it's as open and as transparent, I think, as it can get. And for a fundamental investor, this is a very valuable tool that he can use. Now, this is something that can be measured and is available on different tools, and this is one aspect. But some other aspects of fundamental research are probably a bit more difficult to quantify. For example, the technology that the team has, the protocol has. This is a very important aspect of the fundamental research. The team behind it, is there any backing? The tokenomics is also a very, very important factor to consider, as well as maybe, for example, some of the social presence, etc. But more importantly, the tokenomics, we know that it plays a huge role into the performance of any kind of token. And so, again, there are now more and more tools that allow you to check the tokenomics, check it, the allocations, the unlocks, and you even have actually a specific tool just to see the unlocks of different projects, like a calendar. So there are more and more tools being developed that can help you do fundamental research. But ultimately, for me as a narrative trader, I have been always curious about the importance of fundamentals in crypto. And to be honest, this is my personal take, but I'm not very convinced of how important it is. Let me elaborate. In the bull market, everything goes up independently almost of the fundamentals and the strength of the project, etc. You even see actually sometimes some very weak projects going up just because of the hype, just because you're doing a good job on the marketing, etc. And so you don't really see a correlation between strong fundamentals and strong token appreciation. On the other hand, in the bear market, like we saw last year, especially, everything is correlated to ETH and Bitcoin, and everything is going down. And from the data analysis that I did, I didn't find a very clear pattern where you could see like the strong projects with good fundamentals have been going down less than other kind of projects. Obviously, the difference is that the projects with strong fundamentals do come back in the bull market, so they make a recovery, and some of these bad projects, they don't, and that's where you have to be careful. So that's why actually on my side, I've been leaning more towards narratives, because this is what I'm seeing moves the market more than anything else. And very recently, I've been having an interview with the founder of a protocol, Pendle, and I asked him about this specific question, and he also answered the same. He was confirming that narratives are very important, even for protocols, because you can have a very good project with good fundamentals, with good tech, but actually there is kind of an irrationality in the crypto markets that everybody is looking for kind of one, narrative or one sector or something. And so, yeah, this is for now my findings, but I would love to hear also Mark's thoughts on that.
Mark.
Yeah, I think there's not just one way to think about it. Okay. Fundamentals don't always sort of translate well into token prices. It's very difficult to trade fundamentals. I think that the people that are paying very, very close attention to fundamentals analysis generally have a longer time horizon. The other thing is that it's not always clear how the fundamentals of a project are associated with the token. So, for example, I remember back when MakerDAO first launched, the idea behind the Maker token was that all of the interest, right, all of the premiums on the loans that you've taken against DAI would be paid back in MKR. And that, I think, is a pretty good flywheel. Like that's a good way to actually monetize the utility of a protocol, the finances of a protocol with the token that represents it. In Bancor V1, the idea that the BNT token would be a necessary component of all of the liquidity pools inside the system, again, I think is a very good way to connect the utility of the protocol and its finances with the token that represents it. I think in DeFi Summer, we've kind of seen a pollution of this idea that the tokens and the projects that spawned them are sort of one and the same concept. I think we've seen a very strong deviation from that kind of fundamentalism. And maybe, I think that that's actually probably, quite a shame because it has made things a little bit muddier. It's often the case that the tokens that are representing projects can go up in value simply because the project itself is becoming quite popular. For example, the Uniswap token doesn't really have any fundamental connection to Uniswap's project in any way. But it still maintains a relatively high market cap because people associate it with the success of that project. So whether or not there's any actual fundamental connection between those things doesn't seem to matter because the market can kind of make up its mind as to what the value of a token is. Of course, there are other ways that tokens can be can have valuations either much higher than what they deserve and also much lower than what they deserve. Simply because it hasn't resonated with the right people. So, for example, a good case study would be these kinds of meme tokens that get launched, and I don't think that it would be too controversial to claim that there probably isn't any fundamental value at all in these kinds of cryptocurrencies. Maybe there is a little bit, like some sort of cultural aspect to it, or maybe like a marketing or awareness aspect to it that is, I'd say it's very difficult to characterize that kind of value in dollar terms, but maybe it has some sort of, heuristic value. But that doesn't stop these things from going completely nuts. But from a fundamental component, it's I don't think any economist would be comfortable slapping an actual true price on these things. But the market doesn't mind, and it can determine a price with or without a sound economic valuation or fundamental value. So I'd say that you have to be careful. The fundamentals analysis thing is good, and it should be applied. And there are some places where I think it can be applied to great effect. But applying it generally across the board, you might be missing out on opportunities, or you also might be falling for tricks that you don't necessarily want to expose yourself to. So good example, coming back to the Maker DAO coin. I would say that the most price appreciation that we saw on that token was actually when it was removed from being a necessary component of the way that MakerDAO charges interest on loans, right? After they sort of brought out their multi-collateral system and eventually allowed people to repay their loans in DAI itself, and essentially disconnected the Maker token from everything that system represents, was the time where the Maker token actually started to see price appreciation. So it's almost like sometimes the fundamental aspect to tokenomics sort of holds a token back in a way, and there's no reasonable explanation for that. Like, there will never be a reasonable explanation for that. It makes absolutely no sense. It's completely upside down. But in a way, it might speak to the fact that we need to price in the market's understanding of how these things operate. So yeah, it's, I don't think that there's often rhyme or reason to it, but depending on your timeline. And like anything, if you're applying fundamentals analysis, it's probably just as reliable as applying technical analysis. And so yeah, be careful. There's no, the financial universe has no obligation to make sense to you. And so if there's a token with absolutely no fundamentals that's going 10x, I mean, whatever, that's just the market making up its mind on that particular token. And if there's another token that you think has the best fundamentals of any token in existence, and I know certainly some people in my circles think ETH is exactly that, right? It's it occasionally goes into a strong deflationary mode. The token supply is pretty clean. The use case for ETH is pretty clear, both in terms of its proof of stake, the proof of stake use case with respect to securing the chain, but also with the fact that it's such a necessary component to so many DeFi protocols. Like, it's kind of the de facto numeraire for borrowing and lending. And also for many AMM and liquidity pools. So the fundamentals for ETH are fantastic, even compared to Bitcoin. But that doesn't mean that Bitcoin isn't currently outperforming ETH. And there would be some people on the other side that go, yeah, like maybe that stuff about ETH is true, but they'll have some other reason why the fundamentals of Bitcoin are superior to those of Ethereum. And so there's not, I don't think there's any objective way to do this. I think that the other things that we were speaking about, which are things like the volume levels, liquidity levels, the open interest, and also like the relative strength indicators and so forth. These are pretty good, right? You're basically just got your hand on the pulse of the market, and you're not necessarily reading its mind, but you are, you're basically trying to determine which way the wind is blowing, and whether or not that flies in the face of your fundamentals shouldn't really bother you. You can make decisions despite fundamentals analysis, and still come out on top. But like I said before, you can also fall for easy tricks. It could be that some nefarious market maker or even a nefarious project or their VCs are deliberately making a market look like it's more inviting than it really is, and then plan to pull the proverbial rug on you. In which case, you may have been much better off listening to your, the fundamentalist sitting on your shoulder telling you what to do. So there's no real.
I was just going to say that, like, how do you account, like, the landscape of traders, especially in crypto, is massive. But how do you, like, the asymmetric, like, information problem when you're trying to trade is like always there. And the nefarious actor aspect is what I was going to comment on, which is like, I just read something that was like market makers, like when they know a huge unlock is coming for like a token, they'll just start max bidding that token to send it to the stratosphere to make it look like it's going to be some kind of bullish unlock that's about to come, when really, like, whoever the suckers are that's piling into that green candle are going to use as exit liquidity. I'd be interested to hear from Keith. It sounds like you're kind of in this realm with indicators more. Like, is there any way to know that's happening? Is there any way to see like the nefariousness of that price action?
Well, I can tell you that I study order book data a lot. I stare at fire charts most of the day, every day. And when you spend enough time looking at things, analyzing it, and across different time frames, you can often identify what looks to be a move or a coordinated move by one entity. I wouldn't know who the entity is per se, but I can often track movement with some accuracy of what I'm looking at. And there was a well documented for months example of this from really when we started pumping from the beginning, from Bitcoin started pumping at the beginning of the year. And there's if you scroll through the material indicators Twitter page, you would see this, and of course we discuss it in our Telegram communities as well. But instances of me identifying where they were placing bid walls that they had no intention of getting filled, and they would move them, and they were literally herding the liquidity up and down through February till we cracked the 25K range. So we can sometimes, now just because that looks like choreographed moves doesn't mean you can't trade it. And in fact, if you can identify it and have a certain degree of confidence of what you think the move is going to be, then you can trade along with it. And that's exactly what I did from the beginning of the year was literally, I don't have a big enough stack to try and compete with whales, but I have the tools that can help me swim with them. So I use that order book data to identify where those, where I think they're trying to push price, or where, what I think is legitimate support and what I think might be spoof support. And then the order flow data in the CBD, we have a binned CBD chart by order size. And by studying that, and it's different on every asset, you can get a sense of what order class is really dominating the asset. And I will tell you that the largest order classes that we call whales and mega whales don't necessarily apply to alts, because there's not enough liquidity in the books to support an order that big without major slippage. So you might see a smaller order class in the 1 to 10K range, or 10K to 100K range dominating some of those other coins. But in terms of what I've noticed over Bitcoin for the last 3 years, it's not the mega whales. We categorize the mega whales as $1 million to $10 million order size, whales $100K to $1 million. And it's those $100K to $1 million orders that historically have had the most influence over Bitcoin's price action. And I do that by looking across multiple time frames as far as 3 years deep. And so far, it's paid off. At some point in time, will that change? Perhaps, probably so. At some point in time, actually now, I could tell you that, in the beginning, the smallest order class, which we have, is $100 to $1,000. In the beginning, it was pretty clear that that was retail. Now, at this stage, it's clear that the whales, because of the volume that we see in some of these order classes, whales can disguise their order size of any class, right? And sometimes they have to make smaller orders, and often do, not necessarily to just hide their intentions, but because of slippage. In the past few months, the order books have been so thin that they really couldn't make larger orders. So, it takes some time to study it and get a sense of it, but when you do, it's really beneficial.
Yeah, I follow it's a TWAP indicator to try to pinpoint when those big whales are making, like you said, the gradual trade and movements over time. I think that's super interesting, and I'm really glad Brad connected you with Jen, because I'd love to get into your trading group and have a few other Carbon users get in there and actually digest and understand what you guys are saying, and use Carbon to kind of capitalize on those movements day to day. Do you focus on day trading, or are you all over the place? You have longer term positions and shorter term positions?
I do. And this has taken me some, this took me getting my ass handed to me on more than one occasion. My teeth kicked in a couple of times. And then I initially was holding and then got crushed. And I'm dating this back to 2017, to where I lost like 70% of my portfolio. And then we and then we developed these tools, and I use these, maybe it's the tools, maybe it's the confidence I gained from the tools that helped me get to, recover and get back to the upside. That was a long time ago, but a good example of this. And yes, I would love to have you guys in our group, and I'm definitely interested in what you guys are doing. So we'll certainly collaborate beyond this. But a great example of TWAPing that you just mentioned. Last week it was reported that the DOJ had moved 9,825 Bitcoin that they had seized in Silk Road, and I tend to tune out that kind of stuff because there were so many rumors along the way that, oh, it's Mount Gox, or oh, it's the Silk Road. But there was actually some documented reporting on this. And what had happened the last time that they did this, I think was maybe March or May, that they distributed some coins. And so the reporting said they distributed across, at least 3 exchanges and hundreds of wallets. They're obviously not going to dump $300 million in one shot, because that would just crush the market. There's not an order book that could sustain that. But I started noticing, so that transfer happened on the 12th. On the 13th, price peaked. We had a local high around 32K, and then a dump for, I think, about 35 million. And then from that point, the yellow class, the smallest class, started TWAPing, and I could see it just in a smooth, gradual diagonal line down. But so they're dumping, they're distributing tens of millions at a time on each exchange, but price was still hovering around 30K. Well, we would see bids come in at the very last minute. As price is coming down, bids would come in at the last minute and bolster price, keep it back up, hovering in the range. Why? Well, it's advantageous for the brokers who are selling that coin for DOJ to keep price up in that 30K range, which happened. And by Sunday, when it was all over and done, we started seeing price drop, and the TWAPing stopped as well. We could identify it. We could see it perfectly on the chart.
Yeah, that's interesting. I've got to say, I've been pretty surprised by the recent price action, especially after the Ripple ruling came out. I thought we were going to pretty much be sent into a new, much higher level. But sometimes I feel like whatever you expect to have happen, whatever the obvious thing is, that it's going to happen. The opposite's going to happen.
That's
so
it. You just nailed
it. I was editing like my carbon strategies to I'm like, oh man, this range is dead. I thought for sure that the East 1800 to 1950 range, that's gone. We're into the 2000s, and I was wrong. But luckily I can always readjust those ranges accordingly. But yeah, I'm interested. Are you confident in this current range, Keith, or are you do you think this is a short-lived position?
Let's just say that I have my invalidations in both directions. Anytime we get into the FOMC and a Powell discussion of any way, shape, or form, there tends to be volatility. The 25 basis points is already baked in, right? So there's no surprise there, but oddly, the market always wants to dance with Chairman Powell. By the sentence. And I can see it on the CVD. I can see when whales start buying, and I can see when they start dumping. So, I can swim in that wake if I'm comfortable with where things are at. What I'm seeing right now, based on the liquidity I'm seeing in the charts, and as unpopular as it may be with some of you, between technical analysis and what I'm seeing just with the liquidity stacked in the charts, it feels like support, a better foundation of support is building around the 28K range, low 28s, which is, there's some key moving averages in that range that give me that confidence, or give me the sense that that's what's going to happen. We've bounced the past 2 days off the 50-day moving average, but I'm looking at the weeklies, really kind of landing in the sweet spot. The 21 moving average is right there in an area of prior resistance and support flips, a box that I've had marked on my charts for a year. The 200 moving average is right below that, around 27K. Not seeing a lot of liquidity stacked at 27 yet, but that could change. They could rug 28, and you always have to be conscious of that. But I'd love to see a bounce from 28 to at least retest the upside. We've yet to have that a legit test of the 100-week moving average to the upside, which is around a little above 32K. Actually, now it looks like it's dropped down just below 32K. So that's what I'm looking at as a potential to even consider a bull market. We got to see some weekly candles printed above that 100, and we haven't even had a test yet. So that's kind of the ranges that I'm looking at, top side and bottom side.
Corio, you want to add to it? And then
Yeah, I had a question actually for Keith, because I'm not an order book trader, but when I think about order book, I was always thinking about a team of quants, high frequency trading, etc. How accessible is actually order book trading for a retail investor? I mean, can you just rely on some indicators as you mentioned, or is it like something that you really need to specialize with very good internet and very in-house tools?
So we're using a tool that we dubbed Fire Charts, just because of the color. That's what spoke to me, and I said, let's name it Fire Charts, which is a thermal map of liquidity. And on the same, at the top of the chart is the thermal map. At the bottom of the chart is a binned CVD that I mentioned earlier that has everything kind of segregated by order class, order size, so we can get a better metric on the moves that really influence the price action. So the order book tool, the thermal map portion of it, I can literally, as a spot trader, I can use this to place my bids, place my take, maybe split take profits, where I want a DCA, and I do that visually at a glance, merely by looking at it. So once you understand what you're looking at, which doesn't take very long, it's very intuitive to see what's happening.
we are 8 minutes past the hour. Mark, you unmuted. Go ahead. I want to just make speakers are.
Yeah, I just wanted to say that, like, if anyone is interested in having a look at some of the data that you can get from the centralized limit order books, obviously the best way to get it is via a curated interpreter, like the one that Keith is talking about that he's built. This is hands down the best way to process that data. If you want to get the data in its raw form, if you feel like you're a data scientist or something and you're capable of doing that kind of stuff, there are a bunch of both free and paid APIs. Obviously, the free APIs, you don't want to be making too many important decisions with that kind of information. But Binance has a paid API and Coinbase has a paid API. And so you can just pay the subscription fee, and it will send you, you can make the API call and get massive tables of data that you can, do this stuff. So yeah, the short answer is if you want the data, it's there. You just have to pay for it. The second anecdote that I had is that, with what Tyler said about, with the Ripple case and the opinion that we had where XRP isn't a security, and we were definitely expecting, and we certainly saw a pretty profound move after that. But one of the things that I also pay attention to is the funding rates on some of the leveraged exchanges for whatever token is currently moving, because one of the things that I don't think is often spoken about and probably should be a little bit more front and center in some of these things is that when the market becomes overly ambitious in a token, in general, it tends to follow that there are enormous loans taken against either the US dollar or some other token, and used to buy that token with leverage. And so some of these movements can actually be like magnified beyond that which is actually that actually reflects the true market sentiment. And as those loans turn bad, the exchange basically confiscates them and is forced to sell them back to the market wherever it can find liquidity. And so this is often why like this over bullishness is actually a counterproductive signal. In general, what you want to see is sort of I think it's often said that the bulls take the stairs, but the bears take the elevator, right? What you want in token price appreciation is to see, yeah, sure, some strong upward, some strong upward momentum is always positive. Don't get me wrong, but if it's on the back of loans, then just be aware that the foundation to that token price is pretty shaky, because eventually that loan is going to be liquidated, and they're going to have to recover the collateral somehow, and the only way that they can do it is by dumping that token. And if the liquidity is very, very thin, then often you will see these cataclysmic crashes to the downside. So over bullishness, somewhat ironically, can be a very dangerous signal, and to just be wary of that. It's not enough to see a nice impulsive move on the charts, although it is a nice indicator. You should also go and check the funding rates on all of the leveraged exchanges and see that it's actually a sustainable move. If there isn't a huge amount of loan taken against it, then you're probably safe. But yeah, if you see that the funding rate is ridiculous, then probably better to wait and see what happens before making any life-changing decisions.
Thank you so much.
That's good advice,
Keith.
I was just going to say that's good advice. And unfortunately, we're not aggregated yet, so our tools are focused on Binance, which so far has been a good proxy. In our dashboard, we actually do have a heat map of funding rates and funding regimes as well that are a pretty interesting metric to be able to follow relative to what is happening in the spot market.
Awesome. I want to give you guys the opportunity to any final words for today's call. We are 20 minutes over the allotted time that I had, so I apologize to our speakers. I really appreciate you guys sticking around. It was a wonderful conversation.
This is like my favorite spaces ever. So is this recurring, Jen? Are we going to do this next week?
Yeah, we'll do it next Tuesday also. Same time.
Love it. Yeah, this has been a lot of fun. Thanks for joining us, guys.
Yeah,
it's been amazing having. Go ahead, Keith.
I was just going to say likewise. I'm going to echo that sentiment. It's been enlightening for me, and I'm really interested in checking out what some of you guys are doing. So I do want to look at the Carbon platform, and I'm going to take up the offer for that handhold walkthrough. And I want to see look at the narrative platform as well, and you guys as well. I'd extend an invite to you. I'll get you guys set up. Just you can DM me after the chat, or Jen can coordinate, and we'll get you guys set up so you can have access to these tools.
Awesome. Thank you.
Thank you so much. And yeah, I hope that Cryptocorio and Keith, that you both will consider coming back. I've really enjoyed this conversation. I think that others will get a lot of value out of it. And so yeah, if you guys want to come back and have another call with us, I would be delighted.
It's so valuable having a narrative trader and like a traditional trader side by side. I think it's a great mashup.
You know what? I agree. I actually said to Jen the other day, I think the most valuable part of this is that there's different perspectives that are going to deliver value to all kinds of traders. There's a huge market, opportunity for DeFi to attract more centralized traders into DeFi. We all know that it's just a matter of time. And I'm glad to hear that Carbon is making the moves to make this more accessible and more user friendly for traders. But the different perspectives, I think it just brings value to everybody who wants to come sit in and listen on these conversations.
Guys, I absolutely enjoyed this conversation. We are all in this thing full time, so having different perspective of each of us looking at it from their own perspective and background and education is extremely insightful. And I would be happy to come back again next week.
Awesome. Well, thank you guys so much. I'm so glad that you'll both come back and join us next week. Thank you to all of our panelists. Thank you to the listeners. It's been wonderful. This call has been recorded, so if you want to pass it around within your community, please do. And again, I've pinned a whole bunch of things to the top. If you want to know more about material indicators, go ahead and follow their Twitter. Keith, I posted some things from you as well. Crypto Choreo, I posted your latest post that you were speaking to earlier, along with your Dune dashboard. And I have posted some recent, I guess, tweets with community members from Carbon speaking to their specific strategies. And if anybody is looking to learn more about Carbon, you can definitely follow the Carbon DeFi XYZ Twitter. Join the Telegram. It's the same Carbon DeFi XYZ. And if you would also like to take us up on the offer to do a walkthrough and to learn more just one-on-one about Carbon, please definitely DM myself or Tyler. We are more than happy to jump on a call with you, do a screen share, and just kind of walk you through what Carbon is, how you're able to use it, and how you're able to benefit from it.